Peter Eliades with you. This is Wednesday, December 18th. 'Twas the week before Christmas. And hopefully relatively short today. No revelations today in terms of projections up or down. We want to go over in a little more detail this weekly chart of the S&P, however, and do a quick maybe technical analysis 101 lesson. A lot of you are aware of this, but I love mathematics, and I love to analyze the market mathematically. And when we draw, look at the black lines here. This is the low in the week ending June 7th through the low in the week ending October 4th, paralleled off the high of the week ending May 3rd. So you can draw those lines and you can look at them and say, yeah, but I'd like to know exactly what that number is. Well, here's how you do that. And excuse me for those of you that this is obvious to, but to some people it's not. What you do is take the low of this bar and the low of this bar and find how many points there are between those two lows. And then you simply find the number of weeks. In this case, it could be days if you're using a daily chart, how many weeks there are between those two lows. In this case, there are 17 weeks. And so you simply take the difference between these two prices divided by 17, and it comes up with 7.478 points per week. That's the slope of this line. So you just put this line on the exact high of the week ending May 3rd, and you can see that that's 2954.13. And when you add on, what you would do is multiply the number of weeks times the points per week, which is 7.478. And in this case, from the high to this high was 33 weeks. So without doing all the math for you step by step, it comes out to show you that this week, if you take that 7.478 points per week from this high to this current week, the line this week is at exactly 3,200.91. What is the high so far this week? Well, it's 3198.48, so about 2.5 points away. Now, that gives you a pretty good idea where this, well, it gives you an exact idea where this black line is, but compare that to, remember we did the exercise the other day finding exactly where this weekly projection was. Because when you get a weekly projection, because you only use one offset, in this case 20 weeks, you use a plus or minus 10% range. So we came up with that number for you, and I believe that was 3197 and change. So you can see that right in this area between 3195, 3200, a couple of points above that, is where the market could very well find some stiff resistance. By the way, because this black line, the upper channel, is going up 7.478 points per week, next week, which is only now 2 or 3 market days away. We have Thursday and Friday, and Monday will begin a new week. Next week, that upper line will be at 3,208.39. So you know exactly where that upper line is. If we break it by a couple of points, will that be significant? Well, not necessarily, but it's something to keep an eye on. That's quick technical analysis 101 lesson. Okay, the only other things we want to show you today are very quickly, let's look at the daily projections on a closing basis. We've showed you the Dow Jones Industrial Average projections on an intraday basis, but we haven't looked at the closing price projections for a while, and these are interesting because on an intraday basis, the nominal 10-day projection is just short of being reached. On a closing price basis, it has been easily reached, in fact, in the upper zone of the projection. This projection zone is 28,119 and change to 28,268 and a high number. So round that off to 28,269. The high close so far is 28,264.78. So that projection has been handily met. The nominal 20-day projection just missed. So the lower side of that is 28,294, and the high close was yesterday at 28,264, 65 rounded off. So you can see we've said that these projections one by one are being met. And because the S&P projections have all been met, at least on a minimal basis, we're in a territory where we should be looking for the possibility of at least a short-term market top. An important market top here, it's possible, but there are arguments contra the fact that there would be an important market top here. We talked about seasonality yesterday. That's one of them. The only other thing we want to show you, which continues to look relatively quite bullish, is the advanced decline line of the New York Stock Exchange. Look at this little guy here. This guy does not want to let up. But here's what's interesting here. Look at this tops line. Tops line beginning on July 3rd of this year through the September 11th high. This high on November 4th just missed getting up to it, and now we got up to it full-fledged today, December 18th. So that also is saying, hey, there might be a little resistance here. Doesn't mean we have to stop there, but this is an area where you might look for some resistance. Now, the ideal situation, if you're looking for a market top, is to get some kind of decline from here, perhaps a sharp one for a few days, a week or so, then a rally back into early January, where you would see divergences with some of the market averages, indexes, and especially the advanced decline line. So those are the possibilities we're looking at. We don't see anything like that yet. We'll be following the market with you very closely. Thanks for watching. Subscribe if you haven't done so, bottom right. Click on the red banner. Click on the bell. You'll be notified of all subscriptions. Please give us some remarks below. I've been lax in responding to a lot of these remarks, and I apologize for that. There's a lot going on right now with me with the accident I told you about a couple of weeks ago, and a lot of things helter-skelter in my life, but I'll do the best I can to respond to those. Thanks a lot for watching. We'll talk to you tomorrow.